Minda Corp, like any other auto ancillary company, had been facing challenges due to COVID-19-led disruption. Now, this was quite evident in the last quarter numbers, wherein we saw the top line as well as the operating profitability both show sharp decline in the earnings. Now, in our ideas for profit today, I'll discuss whether now post the sharp recovery that is being seen in the auto segments of, say, two-wheelers, the growth opportunities that also exist in the BS6 segment, and also the company's own fundamentals, do all of that together make it a long-term bet? Well, the company seems on track to improve its margins. That's despite the challenges. During Q1, the company took various cost-cutting measures to maintain its costs as well as to improve the margins as well. Now, it has already cut its employee expenses and also other operating expenses by a significant amount, and the management also expects that about 30% of the reduction is sustainable going forward, which is expected to aid the operating margins even in the coming quarters. Secondly, the company has shut down its loss-making entity, that is KTSN, which is structurally positive and is expected to improve the margin as well as the cash flow for the company going forward. Now, the company also generates more than, say, 60% of its revenue from the two-wheeler as well as the passenger vehicle segments, these two segments. And what is really encouraging is that there is a V-shaped recovery that is being witnessed by these segments alone. Now, the sharp recovery is quite evident from the monthly auto sales numbers that have been posted by the major original equipment manufacturers, or OEMs as we call them. Now, one of the key growth drivers going forward for the company is the BS6 emission norms, which actually got implemented from the 1st of April of 2020. Now, Minda Corp is the key beneficiary of these new emission norms, as it is expected to double the content per vehicle for the company, especially in the commercial vehicle as well as the tractor segments going forward from here. BS6 would increase the wiring harness business for the company, as new wiring harness systems would be required to make the vehicle fuel efficient and to be compliant with the new regulation as well. Now, in FY19, the company had generated about 34% of the total sales, especially from the wiring harness business. Now, this could increase significantly even if there is a slowdown in demand going forward. Now, despite the significant challenges within the automobile industry as a whole, the company continues to get new orders, which boosts our confidence and definitely gives the earnings visibility even during the tough times. Now, in Q1 FY21 alone, the company received about 737 crore worth of orders. The total order book of about 4,000 crore currently exists. Another growth trigger for the company is also the subtle shift towards the premium products in the automobile industry as a whole. Now, we do believe that premiumization trend is expected to augur well for the companies in the auto ancillary space as a whole, as it increases the content per vehicle and also the value of products that they supply to the vehicle makers. Now, we do expect Minda to be a key beneficiary of this trend also, as it has required technological prowess, and its products such as, say, smart key solution, digital speedometers, they're already gaining a lot of traction in the current market. Now, as per the management, the premiumization trend coupled with the technological innovation would actually lead to a substantial jump in the content per vehicle in the coming months or quarters or years. Now, amid the volatility in the overall market due to COVID-19, the stock price is down 40% from the 52-week high levels, making the valuations also quite attractive at the current levels. It is currently trading at 11.1 times FY22 projected earnings. So therefore, investors could actually look at buying the stock with an eye on the long term.